I'm going to try this one more time. You see, I am a parent of two wonderful children, and I believe that the greatest possible investment of our lives that we could make is in our youth, in our children. First of all, it sets them up financially. Second of all, it teaches them how to be responsible, and it gives them an education in investing that they will never get in the real world. And thirdly, it actually makes your children a productive member of society. And as you know, our society is absolutely in decay because we have so many fucking dumbasses running around doing stupid shit. Can you just imagine if parents actually taught their children and invested time and effort in their children? Our country would actually be like it was in the 70s, where you could walk outside safely and people actually respected their elders. With that said, I try to teach people on this channel and educate people on this channel with a lot of finance besides for just let's go to the moon. And these videos never do good. And as much as I absolutely adore Palantir and have a newfound love for SoFi, and those videos do so fucking good, I want to talk about something that actually matters more. In my core, this is one of the most important investments you could possibly make, but nobody wants to watch these type of videos. And it's shocking how many parents don't take into account investing in their children's future. I'm going to be talking about a custodial account. I opened up a custodial account for my son, and I just opened up, or in the process of opening up, a custodial account for my daughter. I want to explain to you how everything works. If you have any questions, please feel free to ask me down below. I'm going to go over the entire procedure of doing it. I'm going to go over the tax implications, and then I'm going to give you an example of how much money you can actually make over a certain period of time. Before I go any further, I am not a financial advisor. I am not qualified to give financial advice, nor am I qualified to talk about or give advice when it comes to taxes. I'm just giving you my own personal experiences. What you guys do with this information is up to you. With that said, what happens? You have a child. Your child is born. About a month later, you're going to get a Social Security card for that child. At the hospital, you're going to get a birth certificate. Once you get your Social Security card, you're going to walk into the bank, any bank, and you're going to tell them, I would like to open up a custodial bank account. When you go into the bank account, they're then going to open up a bank account for you, and you're going to deposit money. You could deposit cash, you could deposit checks, so on and so forth. Usually the deposits that are going in there, at least for me, are gifts. Every single time we have a party or we have a holiday, I ask everybody to please give a cash gift. And I take that cash gift and I put it into their account and I invest that for my children. This is the best possible investment and gift you can get. As a matter of fact, a lot of times when someone gives me, let's say $1,000 to go buy a carriage or whatever, I'm just giving you guys an example, I will buy the carriage out of my pocket, and the money that I got for that carriage or whatever it is, I invest it into my kids' future. And this is how I build up their account. Any gifts we get goes in there. Anytime we throw a party and somebody gives a gift for the party, right, they pay for their plate, I will compensate the entire party out of pocket. I will take that money and I will invest it into my children's accounts. And you will be shocked how fast that account can grow. Once you open up the bank account, now you have an actual bank account. You're going to be in charge of that bank account. You're then going to go to a brokerage account. Not all brokerages have custodial accounts. I wanted to open one with SoFi. They don't have one. This is actually a good thing, not a bad thing, because they have so much more room to grow in the future. I use TD Ameritrade, and I'm sure brokerages like Fidelity would have a custodial account as well. I don't know if Robinhood has. I think, if I'm not mistaken, there is a custodial account for M1 Finance. They opened it up recently, but I think you need to go to more of the legacy platforms to open it up. It takes you around 10 minutes to open it up. They're going to ask you, fill out this information. They're going to ask you for the Social Security number. They're going to ask you for your information as the custodial person, and they're going to ask you something very important. Of what age would you like your child's custodial account to go to them? I picked the age of 21. I'm in New York. I don't know every single state. I don't know if you get to choose, but in my state, they allow me to choose. It's 21. I think certain states have certain thresholds. Again, check with your particular state. Now that I opened up the custodial account, they're going to ask you to fund it. Now that you have a bank account, you just link the bank account to the custodial account. There's various different ways of doing it. You could do a wire transfer. You could sign on online. You could give them an account number and routing number. Irrelevant. Now you funded your account. This is how everything works. You can trade on your child's account, and you can buy into whatever you feel is right for them. You can pick individual stocks, you can pick ETFs, and you could pick anything in between. It's as safe or as aggressive as you would like to be. Now, I'm not going to tell you my personal plays because those are not the plays you guys are going to choose and vice versa. You need to figure out what's good for you and your child's future. And no, my child's investment account is not identical to my personal investment account. There are variations to it, and there have been variations to it, and there will be in the future variations to it. At the end of the day, you need to figure out what's good for you and your family. This is your job as a grown-up and your job as a man of the house or woman of the house. The way the taxes work is quite simple. Any money that you made trading in terms of dividend or in terms of buying and selling stocks, anything up to $1,250, there is no taxes at all, which means if you are making dividends every single year up to $1,250, which is significant, think about it, that $1,250 threshold is really good because every single year you're going to be making gains, God willing, or you're investing in a super safe ETF or super safe type of stock that pays you a dividend. And $1,250 worth of dividends is actually a significant amount of invested money. Anything above $1,250 to $2,300, there is a child tax, which means your child's bracket of taxes is probably going to be the lowest possible tax bracket. So you would have to pay anything above that $1,250 to $2,300 in your child's tax bracket. But the first $1,250 is still not taxable. After that, you get taxed on your personal tax bracket, anything above that $2,300. They want to do this to make sure that you're not trying to scheme the government. Gifts to your child, gifts to your minor is tax-free. Any gifts to your minor, there is no maximum. You can gift as much as you'd like. However, after $17,000, there are forms to be filled out, and there is a maximum that you can gift an individual in their lifetime. That maximum is $12.92 million. So if you're gifting more than $17,000 a year, it's going to go towards that individual maximum $12.92 million. That $1,250, that $2,300, and the maximum individual tax-free gift that you can give an individual always goes up every single year. So as your account grows, as your dividends grows, as your profits and losses grow, so will the tax brackets grow where you can get away with not paying taxes for your minor. Think about what I just said. This is absolutely massive. If the average return is 7% a year, if you're investing into the S&P 500, for example, although I think that the returns are going to be a lot more aggressive and higher because we went through a huge down market. But let's just take 7%. And let's say you're investing $100 a month or $1,200 for the year. At a 7% compound annual growth rate, investing $1,200 every single year, over the course of 21 years, you are just north of $52,000. But your initial investment was just a smidge over $25,000, which means by investing and reinvesting the dividends, reinvesting your gains over 21 years, you more than doubled the initial investment. It doesn't seem like a lot, but think about what I just said. All of a sudden, your kid has a fighting chance in this world. All of a sudden, your kid's money is being put to good use. All of a sudden, your kid's money is going against inflation, right? It's not getting decimated by inflation. Some people might do great returns for their kids. I, for one, made really, really good returns for my son. Actually, the returns for my son is actually much better than my personal returns. And I'm happy to say that because I'm really glad that my son is making money. Of course, these are unrealized gains, but it's still up and I'm super excited for him. Soon I will start investing for my daughter. And my strategy for my daughter might be completely different than my strategy for my son because the market is different now than it was 6 months ago or a year ago. The moral of the story is this: I don't care if you do this. I don't care if you don't do this. At the end of the day, it doesn't affect me in any way, shape, or form, except two ways. Number one, I am happy when my subscribers are happy, and I am very happy when a father or a mother is doing the right thing by their children. And I think most of my subscribers are of the same mindset of let us be responsible adults, especially if you guys are watching finance YouTube. And number two, other than caring that this world is honestly going to shit, I don't really care. I just want productive, young members of society actually contributing to society going forward, not backwards. Again, we see what's happening outside. Not enough father figures in people's homes. People are robbing and stealing and thieving, and this is becoming the normal. The person that is working hard today is the person that is essentially the criminal. You can't even call the cops on people robbing your stores. We need people to be productive members of society. And it all starts at home with you as parents, with your children. A lot of people are unaware with something that I just said, so I hope this helped you in some way, shape, or form. I don't expect this video to get any more than maybe 100 views because nobody cares about anything but went to the moon. If you did enjoy this video and you would like more videos of general finance, not just specific stocks, please comment down below because I would love to give you more type of finance videos besides for just covering stocks. And no, I absolutely love Palantir. I didn't sell a single share. And I think Palantir is going to make me and my family a shit ton of money. Thank you very much. And follow me on Twitter down below. If you want to become a channel member, it's $3 a month. You buy me a coffee, YouTube takes $1. There's $2 left if you find anything that I give you guys valuable information. Have a great Sunday.